Good morning. Today we are meeting for the second monetary policy announcement for the year 2025. Yesterday, the Monetary Policy Board decided to keep the policy interest rate at the current level of 8% and also to keep the margin to form the standing deposit rates and standing lending rates to be 50 basis points. The board remains confident that the prevailing monetary policy stance will ensure that inflation will move towards the target of 5% while supporting the growth of the domestic economy. On the inflation update, inflation remains at a deflationary level. However, deflationary conditions are expected to gradually ease from March 2025. On the medium-term updates on headline inflation is projected to remain negative in the near term and turn positive from mid-2025. The projections also suggest that inflation would reach the targeted level by the year end. The core inflation, which is currently at a lower level, will gradually increase and stabilize at the rate required to maintain headline inflation at 5% level. Over the medium term, headline inflation is expected to converge towards the targeted level of 5%. Sri Lanka's economy recorded a robust growth of 5% in 2024 after 2 consecutive years of contraction. This growth has come in a broad-based manner, with all key sectors contributing positively to this growth. In 2024 Q4, expansion in subsectors of construction, accommodation, manufacturing of food and beverages, as well as textiles and apparels have largely contributed to this positive growth. The leading indicators such as PMI manufacturing, PMI services, and PMI construction, as well as index of industrial production, reveals that the growth momentum continues in 2025 as well. On the interest rates updates, we see downward adjustment in overall market lending rates continued, both reflecting a change in money market interest rates as well as overall market interest rates, including prime lending rate and lending rates of the banks and deposit rates of the banks. Growth in credit by the banking system continues, and we have updated data for January and February. January recorded a small contraction, which was mainly seasonal, and after that, it again picked up in February by around 105 billion, recording 12.8% year-on-year growth. And this growth in private sector credit has been broad-based. Credit has gone to all major productive sectors as well as the consumption. And we expect this momentum in expansionary private sector credit will continue in the period ahead as well. The central bank commenced publishing monthly external sector current account data from January for the first time in the history. And we expect that this monthly publication of external current account data will support timely and data-driven policy decisions by the stakeholders. As per the preliminary data available for February, the external current account has recorded a surplus of around $300 million. And also, services sector has recorded a net inflow of around 400 million by February, which was mainly supported by tourism earnings, sea transport, and IT BPO earnings. On the merchandise trade sector, imports expanded compared to the improvement in exports that led to the widening of trade deficit. And during the first 2 months of the year, trade deficit has widened to $1.1 billion. We see continued improvement in earnings from tourism as well as workers' remittances, which largely supports the external current account surplus. On the tourist arrivals, we see up to 23rd of March, there has been more than 172,000 tourist arrivals recorded. And during the first 2 months, Tourism earnings have been registered at around $768 million. Workers' remittances continues to be above 500 level for several months now. And during first 2 months, workers' remittances have been recorded at $1.1 billion. Gross official reserves remained at healthy levels by end of February, and we expect by end of March it will further improve with the receipt of IMF EFF tranche as well as notable purchases of forex by the central bank. The exchange rate, which recorded 10.7% appreciation last year, has recorded 1.4% depreciation thus far during the year. So with this, the board is watchful, among other things, the possible impact of global trade and geopolitical uncertainties on the Sri Lankan economy. As such, monetary policy formulation will continue to be based on a forward-looking and data-driven approach. The board stands ready to respond to emerging risks to maintaining price stability while supporting the economy to reach its potential. Thank you.